Welcome back to Investing in Trading Live, sponsored by Trading Academy. In the last segment, we were getting into the right asset designed for what your goal or objective is. If you're looking for an income strategy, you want to have the right asset for that. Let's just say you have a few bucks set aside where you could use in the markets. Use that wisely. Maybe use some leverage so you can get more efficiency out of that. And that's what we got into that last segment. We talk a lot about that in these investing classes that we do right here locally at the Academy. We're located right here in Bloomington, state-of-the-art facility. Matter of fact, we're doing sessions across the metro area as well. We've done them in Plymouth, Wayzata, Woodbury, Maple Grove, different locations to kind of broaden our reach to people. That way it's easier for people to come into these investing classes and improve their financial literacy. If you missed one of those classes, or I guess the text in line to do that, simply just text the word investing, and that's to the number 210 210. That's for 2 seats, one for you and one for a friend. Text investing to the number 210 210 right now for 2 seats. Also, don't forget to subscribe to the podcast wherever you listen to podcasts. That's Apple Podcasts, iHeartRadio, Spotify. You can go to Investing and Trading Live. And if you miss part of the show, we do updates on the markets each and every single day on how the markets are going, where it's at, what are some of the opportunities moving forward. So continuing that financial literacy talk, Al, is the retirement side of things is where I think people get afraid to do something about. Yeah. You know, it's great if they have a 401k or an IRA. So say if you're listening right now, you have a 401k with your job or your employer, that's fantastic. You've started to save for retirement. And if you have talked to anybody that has tried retiring or has retired, and they say, oh, yeah, I wish I would have done something a little bit differently earlier in my career, maybe when they were 40, 50, or even 60 before they did retire. There are strategies to use maybe dynamically with your 401k, but especially say you have an IRA.
Right.
That's your money. There's ways to utilize the markets and boost those returns or potential returns by using the right asset that has that leverage. So let's stay on the retirement side for a second, Al. And let's enlighten our listeners. What are some of the strategies that are available with retirement accounts? Let's say with an IRA. If you have an IRA, what can you do with that?
Well, with an IRA, the number one thing you can do is eliminate fees. And fees over the course of your investing years in a traditional 401k, it can cost you as much as 50 to 75% of what you could have when you retire. Think about that. That is a huge number.
But if it's crazy. But if everybody is supposed to have a 401k and they're going to retire with all this money, is that part of the reason they're not retiring with that money?
Well, 401ks were never really intended as the go-to retirement strategy for people. You know, we've talked about this before. They really were designed as kind of a tax haven for wealthy exaitives that to help them to reduce their tax bill.
That was back in the 70s. Didn't they call that or late 70s, early 80s, the salary reduction plan?
Yeah, exactly.
And they changed it to a great 401k word.
Correct. Yeah. So that became the go-to. And the reason that it was so popular by employers was that the responsibility for putting the money into a plan in a traditional
you're talking about pensions?
Pension plan, thank you. In a traditional pension plan, the employer put the money into it. The performance of that pension plan was the employer's responsibility and who they hired to take care of it. Now with 401ks, all the responsibility was handed off to the employee. You know, the employer might have matched some money that they put in there, but that was a small penance to pay for taking that responsibility off of them. So what happened back in the early 80s when 401ks came into existence, every time money was taken out of somebody's paycheck, it was sent to a plan sponsor, and almost 100%, especially back then, was put into mutual funds.
Yeah.
And mutual funds,
which are devastating for retirement accounts.
They have grown to be that. Mutual funds really have become a victim of their own success.
Yeah. Didn't the creator of the mutual fund call it it turned into a monster? There was some sort of quote
Bina
by
was
that.
his name. He said the 401k had turned into a monster that he wished had been torn apart. In fact, rebuilt, which of course never happened. But now mutual funds became so big and they became so spread out that because of the wide diversification, they became very mediocre in their returns. But the fees that were charged both by the mutual fund managers and then the plan sponsor, that's what took that 50 to 75% hit, or why people took that 50 to 75% hit. So there are assets that you can trade outside of mutual funds now in your 401k. Most 401ks will allow you to trade exchange-traded funds. Many of them will allow you to trade stocks. And what we do, and in our classes, we call it dynamic 401k management, where if you can learn how to read a price chart, and that's really the key to being successful.
Yeah.
It's like a radiologist reading an MRI. If everything you need to know is on a price chart. If you can read a price chart, which is what we teach you, we spend time, we're just really concentrating on how to look at a price chart, how to determine if there is a good trade or investment and where it is. What's the price, the right price to get in, which is going to determine the quality of your risk management, and then also it will determine the amount of profit that you can make. So if you can do that, you can pull up a price chart of a mutual fund or an ETF and maybe do some trading within your 401k that will allow you to participate in the components that you have that might be outperforming, maybe moving from something that's underperforming. Maybe you just move into a cash equivalent, so something like a fixed income for a while.
And that ties back to what you said in that first segment of where to get in and where to get out.
Right.
And how you find that is on a price chart.
Yep. Now, in an IRA, because I think the question you asked me, what can you do in an IRA? You eliminate the fees, but you can also use those leveraged assets we're talking about, the income assets, futures, Forex, options. You can utilize those in your IRA. This allows you the opportunity to have the potential for benefits in an up market, a down market, a sideways market, plus great protective vehicles. You can have what is basically the equivalent of an insurance policy on your portfolio.
And that's options, right?
That's through options, right? And when you think about it with your 401k, and we ask this question, I do every time I do a class, how many of you have multiple meetings with your plan sponsor every year? Or we even get down to how many of you have one meeting with your plan sponsor every year? Almost everybody says 0. So who's making the changes? Who's making those investments? You are. You're making the choices. So why not do it in a self-directed IRA where you don't have the fees, you have many more choices, you can have protection, which is really hard to do within a 401k. But if you are going into retirement, if you're getting close to retirement and maybe you're a little behind where you need to be, investing in the typical mutual fund or strategy that Wall Street's putting you into, that buy and hold strategy, is not going to give you the kind of returns that you need. People look at right now, if you're between the ages of 50 and 59, a recent study showed that those people feel they need to have $1,560,000 to retire comfortably, but the average account size that they have is $77,400. That's pretty far short of that $1,560,000. So what do you do? How do you recoup? How do you maybe dig out of a hole or increase the size of your accounts? You have to use something that gives you a better opportunity than what you're going to get from a typical mutual fund.
That's interesting that you said that range for people between 50 and 59. That's actually especially what I've been seeing lately. I mean, I don't know ages and stuff, but I'm guessing what I've been seeing come in, most people are between 50 and 59. Now, if those people, if you're listening right now and you feel you might need 1.5 million, as you said in that study, and what'd you say the average was, 77,000?
About 77,400.
So if you feel like we'll call it a little short, there are strategies to use the market, at least to have an opportunity, have an opportunity to have a little bit more.
Right.
We're not saying you can double it or triple it or quadruple it, but what if you did something a little bit different and we're more efficient with those dollars? Now that might be a difference maker. And it's not always about money. It's about the lifestyle you want.
Great.
It's about
freedom.
being able to be comfortable at retirement time. And if you only have 75, 100,000, maybe 200, 300, 400,000, it's not going to go very far. Now might be the time or the best time to see what those strategies are. And we have a class specifically on retirement accounts, 401ks, IRAs, strategies that are designed for those, learning options and seeing what those opportunities are as well. So to come into one of these classes that are specifically on retirement, simply just text the word investing to the number 210-210. When you do that, you'll get a link in a text right back. So when you text, you'll have a link right back within probably a couple seconds. Just click the link that's in there. It'll say, welcome to Investing and Trading Live, or thanks for listening to the show. And click that link, and you can actually pick your own date in there. So pick your own date, whether it's during the weekday, weekends. I teach these as well. And we have a great time with great people coming into these classes. So especially as Al was talking about, if you're between 50 and 59 and you don't feel like you have enough to retire, now is the time to do something different. Text investing to the number 210-210 right now for 2 seats, one for you and one for a friend. Al, we got one more segment to go, and we've been kind of having a theme of financial literacy. I want to continue that, and I want to kind of go through what it's actually like being a trader or investor, what that kind of looks like, and it's not what most people think. This is Josh and Al, Investing and Trading Live. We will be right